Yo, what up? In this video, I want to talk about some tips and tricks that I use to protect myself, not only from the market, but also from my own emotions in trading. These tricks slash tweaks will help us take less losses and it'll help us be more focused on the process in taking quality, winning trades. I'm also going to go over some technicals backing the setups so we can make sure our mentality is on point for trades that we use and take in the future. I'm confident that this is going to change some of your perspectives. But before we do begin, if you want a very good trading resource, I'm going to link my Instagram in the description below at InvestaTrade. I post daily trading recaps on here, along with very good trading tips and tricks that you really won't find anywhere else. You're definitely missing out if you aren't following it. Link is in the description below. But now let's get right into the video. Let's first go over the charts, and then we're going to get into the psychology backing each setup. To do this, I want to go over the pre-market plan. I post these every single day in the Discord of the setups I'm watching and the levels that I'm looking to trade at. The first one was on Apple. We had demand at 146.36 that yesterday we bounced off of, so buyers were factored in. This is where context comes from. We wanted price to break out of that demand, buyers to be responsive, and we also had a very clean downtrend line that we were watching for a breakout above. So this is Apple on the left. Let me maximize this. The market sold off into this demand zone, and the idea here is to play calls or look to play a bullish position at demand because this is a buy order imbalance and we want to trade on the same side that the market is leading at. So let's just say we got in calls at demand. The option contracts, which I linked up with this chart, they are going to be very similar. Apple 146 calls were trading around $1.10 to a low of 95 cents at the time we were at demand, and it went to a high that day of $1.92 from the highest point to the lowest point. Now let's just say we get confirmation down here at the demand zone. We take Apple long at, let's just call it $1, or when this candle opened at $1.12. We could have, if we had a target of pre-market highs at 147.40, first triggered it at 10.15, could have had an exit around $1.60 from an entry of $1.10. So that is a 45% gainer in a matter of 20 minutes or so. Now here's the problem, and this is where the root cause to a lot of trading failures stem from, is emotions. Emotions, in my opinion, or traders blowing up their accounts, emotions is the leading cause to that. Now the problem with this is a lot of people go into the market without conviction. I could show you tons of different trades that I've taken. They are all based off of my edge because I know buying calls at demand, buying calls on a key level breakout with minimal supply above is my edge, and I know that's going to make me money in the long run. So a lot of people go into the market every day and they don't have conviction in their trading because they don't have an edge. When you have an edge, you trade your setups because you know they work for you in the long run. A lot of people go into the market going guessing. They lack confidence, they lack conviction because they don't know what works for them. To make trading work for you, you need to have conviction, and the only way you're going to have conviction is if you have an edge. I don't trade the market to make money. I trade the market to trade my edge because I know my edge is going to make me money. Now, those traders that trade without an edge or without conviction or without confidence are going to trade with hesitation and with fear because they don't have the confidence factor or the conviction factor that they know this setup has a high chance of working out. They enter blindly without a plan, without an edge, and they question their trade before they even put it on if it's going to work out or not. Now, one thing for sure is no one ever will know what's going to happen next in the market. However, if you go into the market and try to predict what's going to happen without your conviction, that's when it's all going to go downhill. I did not know Apple was going to bounce at this zone. This was just an area that I was looking at. We use price and volume to confirm it, but a lot of people go into the market, they see that it's selling off, they don't recognize we have demand, or they wait for it to come up and they buy, and their emotions do the irrational decisions for them. Now, the irrational decisions I'm talking about are the hesitation and fear. When you hesitate, you lag. And when you lag, You process information later than it's received. This even goes back to some indicators. Some indicators tell you certain pieces of information after that candle closes, and that's going to lag the information that the market is telling you right now. So when you process this information later than it's received and you act upon it at some point other than right now, you are going to skew your risk to reward. And anything that skews your risk to reward will force you to be right as much as possible and as wrong as little and few as possible. In trading, that has to be reversed. You don't have to be as right as much, and you could be as wrong more than you are right and still make money in this game. So let's just hypothetically speak here. Let's act like we haven't watched this video yet. We understand supply and demand, but we missed our entry at this demand zone where we could have had a good area that our risk was very low and our reward was very high at this targeted area of 147.40. We're sitting on the sidelines, we're lacking confidence, we're lacking conviction. It sometimes is normal if the market doesn't provide perfect opportunities for you. Sometimes I miss trades because the market didn't give me clear and concise signs. I'm trying to remove all of the traders that are hesitant because they don't have confidence in themselves. So let's just say the market comes up. We're still not entered at this point. The next candle opens. We see a huge green candle and we chase all the way up here. Keep in mind, our real perfect entry would have been when we were close at this demand zone with confirmation. Usually my stop is probably going to be below the low. So let's just call it about 40 or 50 cents. We're risking here to make about $1.20, $1.30, which is decent risk to reward. We could afford to lose much more than we do when we win. This would have been a good entry. But because we hesitated, we waited too long to enter hypothetically speaking, now we have an entry all the way up here at 141 or 147.10. And if our target is about 30 cents away, our risk is way too much for our potential reward to the upside. Now, for me, I can only explain what works for me and what I think as the market's developing. If I saw the contracts down here at $1.10, $1.20, and now I'm waiting to buy when the market's all the way up here at $1.50, I feel like I'm not getting a good enough bargain as I would have when I had the first thought to buy all the way down here. Now, the market we're buying up here, this trade would have worked out, although we may have got scared if we didn't have confidence after the market pulled back. But from a risk to reward standpoint, this trade, if we're buying up here, does not make sense, even though it did work out. Sometimes it will backfire more than it does benefit you. Other examples on DocuSell, this was from the pre-market plan today. We were flagging near all-time highs. We had demand at 289.85 that we bounced off of. Buyers are trying to bring this thing up. They're factored in. I like a breakout of this flag above 309 key level to play calls targeting an all-time high break. Now this trade I did not take, not because of the hesitation or fear of my emotions, but because I'm a smart and responsible trader that I am very patient and disciplined enough to wait for the best opportunities. So one thing about my trades, this should be about everybody else too. It's relatable across the board. This is the formula or what I look out for before a trade gets put on. I get my confirmation. Once I get my confirmation, I pinpoint an area to have a stop loss. Then I pinpoint an area to have a target. Then I enter. I react as fast as possible. I don't hesitate because of my emotions. And after all those four things are done, I follow my plan with little emotions. Whatever's going to happen is going to happen. If I win and I followed my plan, perfect. It's going to make me a lot of money and I'm going to be very satisfied. If I lose and I follow my plan, I'm not going to cry about it. I'm not going to make a loss affect me because one, I followed my plan, and two, the market just was not in agreement with my plan at that point. But number three, if I don't have a plan and I enter based on my whim where it just doesn't make sense, that's when I'm going to get upset. That's when I'm going to take an unnecessary loss. That's when my decision is going to be based off an irrational one, and that's when we're going to blow up our accounts. So if I need to see these factors, if it does not make sense, my stop loss to where my target is, I personally do not take the trade and I will just wait for a better opportunity. You have to be very defensive over offense in trading. It goes a long way. Look at the best defenses in the NFL. Look at Mayweather, for an example. He's a very defensive fighter, and it got him to the point where he's at right now. Defense wins in this game, believe me. So here's the docu setup. We were looking to play calls above the 309 area. Unfortunately, it happened in the first minute. And if I pull up the docu calls, I got the 310 calls up here on the right side. Got the options linked up with my crosshairs. At the point we broke out above the 309 level, the contracts were about $4.30. I had a limit order at 415. I did not get filled on this. I had intentions of getting in, but my order simply did not get filled. And the following candle immediately rallied to the upside. And at this point, my risk to reward is skewed. I once had a potential entry at 309 at $4.30, let's just call it, or $4.15. Now I see the contracts once we break out at 309 level when we're at 310 at $5. And now I'm paying an 85-cent premium on my contracts because I didn't get filled. At this point, I feel like the deal is over. I missed my bargain and I'm not chasing up here because now I'm buying at 310 when my target is first all-time highs, where I'm risking now, $1.30, let's just call it $1.50, to only make 70 or 80 cents. It just doesn't make sense. So I didn't chase this trade. I didn't make a decision based off of my emotions or FOMO because I didn't want to miss this move. Instead, I stayed sidelined. If I did chase, it could have worked out. But like I said earlier, it's going to backfire more than it does benefit you. And these from my original limit order entry at 415 right here went to a high of $7. That's a 70-cent return in 3 minutes of trading. So if you go with one contract, $400 investment, you're making a $300 profit out of that. So it happens fast. The point I want to make here is if you missed your entry, if the market moves fast away from you, it's okay. Don't chase it. If the market wants to consolidate, we want to create demand, it wants to provide another opportunity, go for it as long as your risk is tight. But if you don't have a valid area to put a stop loss, if I was chasing docu up here, where's my stop loss at this point? I can't put my stop loss at the low because it just doesn't make sense, whereas it did, right here. I like to use the analogy of you're waiting at a bus stop or you're going to the bus stop and you see the bus is there and you start running towards that bus, but it leaves without you. Sometimes it's better to not chase that bus at its next stop. Instead, it's better to just sit there, sit on your hands, and be patient enough to wait for the next bus to come / the next best opportunity in the market. It's all about patience and it's all about being disciplined and making the right decisions. This member said it perfectly today. A lot has to do with his confidence. He's a newer trader. He doesn't consider himself consistently profitable yet. However, something he's learned over the past few months is having conviction, trusting your own setups, and having the confidence to execute those setups. He took this docu trade today, made $420 off of it. It's been on his watch list. And a game changer has been trusting himself, having conviction in himself, and it's only built over time. If you're scared, size down. I cannot stress that more as well. A lot of people are trading with too much emotions because they're too heavy sized into the market. Trade your setups, not your emotions. It's going to help in the long run. Happy to be on the journey he is to being consistently profitable, both highs and lows. The best way you could describe the investor trade community is you're provided with a toolkit and all the necessary equipment you could possibly need. Then it's up to you to make what you make out of it. So exactly what this point of this video is, it's actually funny he came up with this today. You need confidence, you need conviction, it happens over time. You also need to know the right things about the market and the auction. But Boeing's one of those setups where let's just say we got long at demand at the 228.04 demand zone. Would have been a beautiful entry. Let's just call it about $2 on the 230 calls. These went to a high of around $5, so pretty crazy return. But it's at this point where we just continuously rally to the upside. It doesn't really provide any other good entry points where we consolidate, we create demand, we break above a key level. If you got long at this demand zone, you'd be chilling. But at any point, we're up here, your risk to reward is skewed. Up here, you're skewed. Up here, you're skewed. They all would have worked out, but it just doesn't make sense because the market really didn't provide us with another good opportunity to get long like it did over here. So I always like to protect myself. If it doesn't make sense from a risk to reward standpoint, I protect myself. I play defense over offense, and I just sit on my hands waiting for the next best opportunity. That's all you could do in trading. So I'm going to leave you all off on that note. Be sure to hit the thumbs up button if you learned something, you enjoyed this video. Subscribe to my channel. Follow me on Instagram. And if you truly want to learn more, check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord, no extra cost. I just added a voice chat feature, which a lot of members are enjoying. So definitely check it out. But besides that, peace.